Hello, everyone. My name is Guillaume Pro. I'm here today on behalf of Beta Virtual Assistants. I'm the VP of Technology here, and I'm here to talk to you about the Tuesday tax tips. So let me check just briefly if the looks to be working properly. Be- Okay, sounds good because we had some sounds issues previously. So today I wanted to talk about a topic since we just ended yesterday the tax deadline in Canada. So I was just going to talk to you a bit about the tax consideration here in Canada. And the reason we talked about that is because, of course, we have probably most people are in the US and they're possibly aware a bit of the rules in the USA, but some different countries have slightly different rules, and just to give you an idea of what could be different in your country, and that might affect a bit some of your decision or planning as well. So, um, what's similar in most countries and here in Canada is normally it can be the crypto. Basically, if you're buying something and you're not selling, that's true that you might not need to report that. But what is often a common mistake is people think that unless they got back some kind of money in their account, like fiat currencies, they assume that until they get it back in their bank account, that only in that case it's going to be taxable, which is incorrect in most places. Each time you're doing mining, you're receiving some kind of income, earnings, interest, different things. Each time you're transferring from one coin to another or selling your coins, even if you leave it in the crypto world, it's all of those are taxable events. So basically, each time you're doing any kind of conversion from one type of asset to another, that probably will trigger a taxable event. So that's one thing to be aware of. Then the other thing is there's two main type of like income. There's like again earnings and interest and rewards and different things like that, which are normally categorized here in Canada as like business income, if you say. And then there might be something else that might be more categorized, like if you're selling and just like holding for a certain period of time, then basically that will be categorized as capital gains. So the thing with income is here, it's normally added to your other types of incomes, and it just gets added to your income. And basically, if you it will probably it might be taxable at the whatever tax bracket you're currently, or if you do more than a certain amount, of course it might get you to the next tax bracket, but that's directly taxable like any other income or revenues you might have. So that's the often the case, and it's not so advantageous here, and particularly in Canada because of that. The second thing is if you're able to just do more like kind of on more like a kind of investing type thing and not really trading or other kind of income, if it's more like investment purposes, you might be able to categorize those as capital gain. And the way it works here is you take your capital gain amount and it's kind of might look kind of weird, but basically you take 50% of that, and that's also added to your taxable income. So basically there's not a different tax rate or anything for capital gain. It's just that only half of it gets added to your taxable income. So basically you're paying half as you would normally. But then again, if you're in a low tax bracket, it's not too bad. But if you're in a higher tax bracket, you may end up paying quite a lot of taxes as well. So That's the main thing about that. The other thing is there's no such thing here as short-term and long-term capital gain, like in the US, where after a year it might be long-term capital gain. So you have to be aware of that. So that means that you might not be able to use this to your advantage. Let's say you want to hold things for a certain period of time. So basically you won't get any benefits from that. So another thing is that's a reason why some people were they're more active. Well, one thing is, like I said, if you're doing any kind of active trading, any kind of if it's that your main source of income, if you're really doing like day trading or something like that, or automated trading, and they consider that's like more like a business type of activity, again, you might not even be able to qualify as capital gains. So that's something you need to be careful. That's a reason why some people, they will try to set up some kind of business entity. And it's just because that one is you might be able to deduct some of your expenses at least. And another reason is you might be able at least not to necessarily pay taxes on all your income, because when you have a business entity, you have other options for delaying your taxes or reporting it, or so that might be something to consider if it's an important part of your activities. The other thing I wanted to mention is if you have losses, again, if you have losses, you might be able to deduct the losses from your gains. But so if you have $10,000 gain and $5,000 loss, you will deduct the 5,000 loss from your 10,000. So you end up with only, let's say, $5,000 gain. So that's something you might be able to do. Also, you might be able to, I think it's 3. You might be able, otherwise, if you have more losses than gains, you might be able to report that for future year. Or I think you can also, I just forgot, I think you might be able to file previous year and apply that, but I'm not sure about that anymore, or if I'm being confused. But I know for sure you can apply your losses, especially for the current year or future years. So that means that you need to, so that's something that people sometimes forget, is you might be able to, people maybe they started like this year or last year, and maybe they think they have a bit more losses than gains for some reason, and because people try different things, especially when they're new, and they may have made some bad decisions. But if you might end up having to file for taxes for your crypto in the next few years anyway, and might have to report some of your gain, you might as well start now, and at least you might be able to have your losses filed, and then you might be able to apply those in future years. So that's something to consider. It might be useful to file for taxes even if you don't have any gains yet, or you have more losses than gains, basically. Another thing is like I said, the deadline officially was April 30th, and then I think because it's a Sunday, it was until yesterday you could file your taxes. So people, if you're self-employed, then until June 15, and then if you have a business, then it might be a different date. But basically, as long as you pay what you owe by April 30, then you should not have any penalties or interest to pay. But if you paid what you're supposed to as an estimate, then if you have not filed yet, I think you're okay to file a bit later. And normally, if you get a refund, then they won't say anything, because you're getting a refund anyway. But if you owe money, then you might have to pay such taxes. But I know a lot of people, sometimes they just don't report their taxes, or they haven't looked at that yet because they didn't know how to do it, or they just try to ignore it. So if you need any help with that, and it's always possible to either file an amended return if you decide to, or something like that. But I would say the first thing is to really clean up your crypto records, and then you will be able to make a decision on if you want to report those crypto. And don't forget that you have to disclose if you have crypto investment, and it's not, you cannot just say like you didn't know, or I forgot, or anything. So of course you might have to consult with your tax advisor also for some of this. But what I'm saying is that we're still able to help people sometimes, even though their deadline is fast, because there's always an opportunity to file an amended return or things like that. So it's not necessarily too late, like if you need help with that. One thing I forgot to mention too is here, in each country, they might have different tax method that they consider, because the way they consider crypto is some slightly different, and the way they consider, let's say, business, or like a bit like business inventory, where you can have different tax method, let's say using first in first out, or last in first out, or average cost basis. But that's actually in Canada, the only tax method officially that they accept for crypto is adjusted cost basis, where basically it's like kind of getting an average of all your purchase, and then when you sell something, you're basically deducting the average cost basis, which is how much you paid for this asset before you sell it. So that's something also that's a bit of a limitation, because there's only one tax method that's accepted here. So you need to pretty much use that. And that complicates thing a lot, actually, in some cases, because let's say you bought some a few years ago and you sell them, then let's say using first in first out, the first one you bought, you're selling right now. But if you're using this method here, you need to basically average everything that you've been doing, and especially if you're using any kind of trading or bot automation, that it ends up with a very complex calculation of all the average of all your purchase for that particular, let's say, coin. And so, but again, with the software recommend, it can handle all the different things with different countries and the different tax method, and you can even it will handle all of that basically for you, as long as you have all the transaction in the software, and we help you with that. And we have different ways we can handle different situations, but basically the software takes care of all that in the end, as long as everything is in there. So you don't need to worry about calculating anything very complex. So it's more about making sure you have good crypto records, and you remember what you did, and we make sure everything is in there. And then we choose the right settings for your particular situation. So I think, so that's pretty much the situation here. And of course, that's always subject to it sometimes kind of might evolve over time. So we always make sure we're up to date with this. And we have some resources that we could refer to you if you're like tax professional is not aware. But basically, when we create all the tax report for you, you pretty much can present that to your tax professional, and he doesn't need to know much about crypto really, just need to put the number in the right place based on your situation. So that simplifies a lot. People who have a complex situation and they don't have any one currently that can help them with the crypto tax, and doing the reconciling for someone doesn't know how to handle crypto can be very difficult. So we recommend we have either a course about that if you want to do it yourself, or we have done for you services, or we also have the software that we can recommend if you want to play with that, which also has good help again. But of course, you need to spend some time on learning how to use it but that's an option if you want to. So we have also a link normally that if you want to watch a replay of one of our previous workshops, if you're interested in learning more about our services. And we're still around if you have any question or any subject for next Facebook Live on Tuesday and Thursday normally is crypto tax tips. And on Saturday, it's more about different strategies and investment options. And so we're here if you have any question at Beta Virtual Assistants. So looking forward to talk with you, and thank you for showing up or watching the replay, and we'll be in touch very soon. Have a good evening.